When you look at something like Bitcoin, is Bitcoin more accepted or less accepted than 10 years ago? And the answer is more accepted. And I had this discussion with George Selgin on I think it was David Lynn, or I forget what show it was, but I was talking with George Selgin. And it's like, in any given country, because there's kind of a local monopoly on the currency, unless it's like a failed state, 10 out of 10 merchants will accept the local money, right? You have a very dense jurisdiction. But as soon as you go outside of that country, that acceptance fades rapidly for most currencies. Even like the Norwegian currency, it's a strong currency, but if you try to find a vendor in New Jersey that's going to just accept physical Norwegian currency, it's almost none.
According to Lyn Alden, an independent macro analyst, the majority of currencies lack global salability and are limited to their local jurisdictions. This means that aside from their local use, these currencies have little value or acceptance elsewhere due to frequent devaluation, low liquidity, and lack of recognizability. As a result, the global monetary system resembles a barter system, with 180 different currencies each having their own local monopolies. Only a few currencies, such as the US dollar, the euro, and gold, possess global salability to a significant extent. Additionally, there is the issue of financial censorship, with a limited number of countries being classified as free by organizations like Freedom House. This classification has declined over the years, making it challenging for individuals in developing countries to access bank accounts or face arbitrary freezes. Furthermore, refugees often struggle to bring their wealth with them when forced to relocate. In this context, Lyn Alden examines the case of Bitcoin, a relatively young currency at just 14 years old, and its remarkable dominance in the pursuit of being considered a perfect form of money.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The bigger point I'm trying to get to is that when you ask perfect money, what is perfect money, or what is ideal money, you'll get very different answers from, say, the people who want to issue that money, or people who are academically inclined and systematically inclined and think like, what is if I were to design the system, what I would make it like? It'd be like dynamically adjusting, and it would. Whereas like if you're the user of the money, your answer is I want the money that's going to appreciate over time. I know the supply, I know the rules. The rules are not going to be rug pulled on me. I want to be able to bring it anywhere in the world. I want nobody to be able to dilute it. I want nobody able to just take it from me, especially easily, just like with a push of a button. And I want it to be fast, and I want it to be secure. And so you get actually very different answers to that question if you're kind of looking at it from a user perspective. You hear like a dynamically adjusting system, and users are like, no, I don't want that. I just want to hold hard money. Whereas if you're a central banker, if you're a normal banker, if you're an academic, if you're a monetary historian, you're like, hey, we need this kind of system that's going to meet all these different requirements. And it just doesn't take off because users don't want that money. And I think that's where I go to the Austrian view that money is an emergent phenomenon. And even when you have top-down designs of money, like fiat currencies, it's not an accident that some of those monies are accepted in other countries and ones are not. So there's a reason that the dollar is accepted more places than the yuan. There's a reason that, like the Nigerian currency is not accepted everywhere. There's a reason that certain currencies are accepted more often than others, and it's because those are actually kind of free market choices. So, for example, when my family in Egypt, when they like hold physical cash dollars, they're making a choice. No one's like in America, we kind of have to use dollars, but when you're in Egypt, you could hold yuan, you could hold something else, you could hold Egyptian pounds. That's the easiest one to do, but they're making a decision to hold dollars. Let alone obviously gold, Bitcoin, all these others. And so money's at its root really an emergent phenomenon, but that even includes attempts at top-down money creation. Kind of the features of the Federal Reserve is that it was like this weird agreement to make it half public and half private. It's like the president can't just call up the head of the central bank and change the rules, right? There's actually kind of a set of balances, and it takes pretty extreme intervention to actually centralize it. And so one is that the United States has, no country has perfect rule of law, but the United States has one of the better, more consistent rules of law, right? So China can rug pull you more easily than the United States can. In a broad sense, you're more likely to get rug pulled. And you have closed capital accounts and things like that. And so the combination of being the largest military power, largest economic power, biggest liquidity, and then some reasonable degree of rule of law and decentralization, so that there's no one person that can just print a ton of money. It's the fiscal lever exists, the central bank lever exists, the commercial banking lever exists, and these are kind of in this sort of delicate dance that has allowed it to maintain for decades. It's actually that rules-based system, even though the rules aren't as solid as something like Bitcoin, for example, there's some degree of rules to it, and that's what made it trust globally.
According to Alden, the Bitcoin network possesses an intrinsic value that sets it apart from bank deposits, physical cash, and gold. It offers unique capabilities such as the ability to make permissionless global payments and maintain access to self-custodial funds, regardless of one's location or movement across borders. Additionally, Bitcoin benefits from a robust network of nodes and consumes more energy than any other cryptocurrency, contributing to its liquidity and scalability. This newfound capability, once unleashed, cannot be reversed, as the technology is open source, widely distributed, and well known. Even if a country's government or central bank imposes restrictions on cryptocurrency exchanges within their banking systems, the network can still bypass these obstacles through peer-to-peer transactions.
Other than the dollar and to some extent like the euro and a few others, they quickly lose salability outside of their own jurisdiction. And then you think, which currencies are somewhat global? Which ones are somewhat globally accepted? So one of them is the dollar. That's number one. It's got the entrenched network effect, the most liquidity, the biggest capital markets, rule of law, launched by the biggest economy, entrenched network effects, deals in the Middle East, everything that kind of like fed the network effect, and then it becomes self-sustaining. Another one would be gold. If you bring a gold coin with you, especially like a sovereign gold coin, which gives it some degree of authentication and easy verification. If you bring a gold coin, a gold eagle with you, almost anywhere in the world, you can find a buyer without much slippage. You might not be able to go to a coffee shop and get a gold coin, but you can find someone within some degree of blocks that'll give you a reasonable amount of value for that gold coin. You can get it convertible pretty easily. Euro is pretty good. Silver is okay. And Bitcoin is already in the top 10. It might be number 5 or something, but at the bare minimum, it's in the top 10. And that's despite the fact that it's a 14-year-old currency. And so unlike the dollar or the euro, it doesn't have any sort of like local monopoly where it has this very dense degree of acceptance. I mean, maybe now El Salvador is an exception, but you don't really have these dense areas of acceptance. Instead, it's a digital currency that you can bring in many places around the world, especially urban cities, and it's already a top 10 currency by salability despite no monopoly, nobody enforcing it, and despite the fact that it's still very young and the trend is up.
Hong Kong's prominent legislator, Johnny Ng, has extended an invitation to global virtual asset trading platforms, including Coinbase, to establish their operations in the city. This move signifies a major development for the cryptocurrency industry. The new licensing regime implemented by Hong Kong on June 1st for crypto retail trading sets the stage for increased opportunities and growth in the digital asset market. Coinbase, a global crypto exchange leader, has expressed strong interest in expanding to Hong Kong, despite ongoing legal scrutiny by the U.S. Securities and Exchange Commission. This showcases their commitment to compliance while recognizing Hong Kong's appeal as a hub for expansion opportunities. By embracing global cryptocurrency exchanges, Hong Kong's new licensing regime demonstrates the city's commitment to fostering innovation and attracting top players in the crypto industry. This positions Hong Kong to become a prominent hub for crypto trading and innovation, driving economic growth and establishing itself as a leader in the evolving digital economy. Lyn Alden's perspective on Bitcoin as the perfect money invites discussion. Please share your thoughts in the comment section below. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.